Nearly 20% of Floridians do not have home insurance, as insurance costs have surged up to 400% in recent years. This is double the national average. In fact, according to Insurify, Florida homeowners pay the highest rates in the country, with an average annual cost of $11,759 in 2024. Not only that, but many national insurance companies have stopped offering policies in the state or have left it completely. Since 2003, 41 Florida insurance companies have declared bankruptcy or have failed, according to Reuters. To put it into perspective, that's more than the rest of the country combined during the same period. Just last year, Farmers Insurance decided enough was enough and bailed on Florida altogether, becoming the first major insurance carrier to leave the state. This exodus left millions of homeowners struggling to find coverage. And even when they do, they're faced with astronomical costs. So how does this affect Florida's housing market? Well, I'll tell you, it's collapsing. Pending home sales are tanking. According to Redfin in West Palm Beach, pending home sales nosedived almost 18%, the greatest decline experienced in any of the 50 most populous metropolitan areas. Tampa saw pending home sales drop 15.5%, and in Miami, pending home sales fell close to 15%. And this is happening even as condo prices are falling in some of these markets. Buyers are simply walking away because the cost of owning a home has become too risky and too expensive. That's due partly to Hurricane Helene, but coastal Florida's housing market has been slowing over the last several months as insurance and HOA, Homeowners Association, costs surge due to the increasing prevalence of climate disasters, the analysis stated. Hurricane Helene and Hurricane Milton, which hit just days later, may have a bigger impact on future home sales. Insurance premiums aren't the only things on the rise. Homeowners in Florida are also facing dramatic increasing HOA fees. Cities like Tampa and Orlando and Fort Lauderdale have seen HOA dues jump over 16% in 2024 alone, with Tampa leading the way at 17.2%. The driving factors behind this surge? Well, just like insurance, it's a matter of higher costs for property repairs, escalating insurance premiums, and new safety regulations that were introduced after the tragic Surfside condo collapse in 2021. Homeowners are being squeezed at every turn, and the result is a housing market that is struggling to stay afloat. And it's not just a matter of struggling to keep up with the bills. Many are losing the battle entirely. Foreclosures are spiking, and this is yet another heavy hit to Florida's already fragile housing market. As of July 2024, more than 2,300 foreclosure starts were recorded across the state, particularly in cities like Jacksonville and Orlando. But this isn't just a random statistic. These are real people losing their houses, and it's happening for a reason. These foreclosures are driven by these same factors crippling homeowners: escalating insurance premiums, rising HOA fees, and the financial fallout from repeat hurricane damage. Let's just break it down. You've got Floridians already struggling to keep up with those skyrocketing insurance premiums, which now average over $11,700 a year. Then pile on HOA fees, with cities like Tampa and Orlando seeing increases of 16 to 17%, and it doesn't stop there. Add in the cost from repairing damage from relentless hurricanes like Helene and Milton, and suddenly maintaining a home in Florida suddenly becomes completely unaffordable for a large chunk of the population. The problem is, it's not just affecting those already underwater. This is impacting potential buyers as well. I mean, think about it. Why would anyone want to invest in Florida real estate right now when the risks and the costs are so high? The foreclosure numbers are rising, but the bigger issue is that pending home sales are plummeting. Why? Well, a lot of it does come down to the insurance crisis. With so many insurance companies leaving the state or refusing to write new policies, buyers are looking at this situation and thinking twice before signing on the dotted line. It's a domino effect. If fewer people are buying homes, prices start to drop, and homeowners who were already struggling are pushed even closer to foreclosure. But here's the kicker. This isn't just a short-term problem. As climate change continues to intensify, hurricanes are becoming more frequent and more destructive. Each time a new storm hits, it's another blow to homeowners, and it sends insurance premiums spiraling even higher. A Redfin Commission survey found that almost a third of residents between the ages of 18 and 34 said they were reconsidering where they want to live after seeing or hearing about the damage caused by Hurricane Helene. Americans are beginning to realize that nowhere is truly immune to the impacts of climate change, and we're starting to see that impact where people want to live. Even people who haven't experienced a catastrophic weather event firsthand. Redfin's chief economist said at the time, housing is already so unaffordable for many people. Can you imagine tacking on even more costly insurance premiums? It's a perfect storm, and the result is a housing market that is teetering on the edge. Let's not forget about the investors. Yes, there is potential opportunity here for those looking to snap up distressed properties at a discount. But even for them, the risks are even higher than ever. With unpredictable insurance costs, ongoing hurricane threats, and the uncertain future of the real estate market, investors are being cautious. According to Wolf Street, nearly 5% of home listings in Tampa, Orlando, and Jacksonville come from institutional sellers hoping to cash out before the market worsens. Jason Lewis, co-founder of Parcel Labs, warns when institutional investors exit a market, it can be very quick. It could have a cascading effect on home prices. Analysts say that Florida is facing a potential housing market correction as inventory is outpacing demand, leaving prices flat or even declining in certain areas. A state once flooded with eager buyers is now full of desperate sellers. Brad O'Connor, the chief economist for Florida Realtors, believes that with the surplus of homes on the market, we could see some price deterioration in some areas, he told the Journal. This isn't the easy money Florida real estate once promised. Now, it's more like walking a financial tightrope. One outlier is Miami, which is doing better than some of the other markets in Florida, especially in the luxury real estate markets, which continues to see strong demand from wealthy buyers. However, it's not all smooth sailing. While the high-end market may still be attracting interest, pending home sales in Miami have dropped by nearly 15%. This decline signals that even in a city like Miami, the broader challenges such as rising insurance premiums, increasing HOA fees, and the lingering effects of hurricanes are making an impact. The luxury market may still be holding strong, but the mid-tier and entry-level segments are certainly feeling the pressure, especially as the cost of living and home ownership continues to rise. So where does this leave us? Florida's housing market is fragile to say the least. Without major reforms, whether that's in the insurance industry, climate policy, or housing regulations, the situation is unlikely to improve. For now, the costs of owning a home in Florida are just simply too high, and the risks are too great. The housing market is tough in a lot of places across our country, and a lot of home buyers are regret buying their homes and are thinking about going back to renting. If you missed our video on why homeowners regret buying and are now going back to renting, definitely check that video out next. Thanks for watching. I do appreciate it. Bye!